Hello and welcome back to the Sovrenfx YouTube channel. So today I'm going to go over a simple 5-minute scalping strategy. I'll be going over this using these two indicators. So this is a type of crossover scalping strategy, and as you can see, maybe you can catch a glimpse and realize that these are not the regular exponential moving averages or the simple moving averages. You can pause and take a guess at what these two are. I think I made a video of it before. Okay, so jumping right into it, I'll also show you a better way of filtering the trades that you get into by the end of the video. Okay, so this is basically the Ichimoku cloud. Okay, I'll go over how to set it up. Let me remove all the indicators. So step one, without wasting time, we have Ichimoku. That's the Ichimoku cloud. And this is how it will appear. It is very clunky and it's sort of fills your chart. The cloud is also so bulky. You don't have the chance to interpret what's going on in the markets if you're a beginner. But if you're a beginner, I have something that will help you. So I want you to copy my settings. Just click your settings. You can uncheck this, leave the conversion line and the baseline. You also want to uncheck the plots background and this, which leaves you with two lines that will form your crossover. So when the red line is above the blue line, sell. When the blue line is above the red line, you buy. So with this strategy, with any crossover strategy, you'll realize that when the market is ranging, you get a lot of false entries and exits. You'll end up entering trades that are not very efficient. So this is how I filter through the noise in the market when it's ranging. You add one indicator. So here we'll add our moving average. So this moving average, it's known as the aqua, and if you've been in the trading markets for a while, you realize that you already know what input I'm going to have. So my input is going to be 50. This is going to be my style, and I'll have it a little bit thicker. So this is the aqua. This is the 50 moving average, simple moving average. So you can copy my settings. I forgot to show you this. Here are the settings. Here are the inputs: 50 length, source close, offset 0, method SMA. Don't confuse it with the EMA. So this is the aqua. So when price is below the aqua, only look for sell entries, and when price is above the aqua, only look for buy entries. And as you know by now, no trading strategy has 100% winning probabilities, and you're going to have times like this where technically this is still a win because price was sell and it wasn't below the aqua, so it still worked. That's how good this strategy is. What I'm just trying to say is, don't be afraid of taking losses. We all take losses, but with this strategy, I can guarantee you at least 75% win rate if you execute it accurately. So those are just the rules. So have a pen and paper. Step one, look at where the price is in accordance with the aqua. If it's above, only take buy signals. If it's below, only take sell signals. And what are the signals? If it's above, you only want to look for the crossover. If the blue crosses over the red, here's your entry. Beautifully executed. You can have your stop loss. I showed you in the previous video how to set your stop loss using the ATR. Some might use the ATR, some might use this area of interest. So you just have it here below. You can have your take profit to 1 at 1:1 risk to reward ratio, 1:2, and finally 1:3. TP1, TP2, TP3. SDT, and that's your trade. Okay, so second trade, here we have a sell, but the sell hasn't matured yet since price is still above the aqua. So you just have to wait. It came below, but there's no flip. So as if you use your eyes keenly and zoom in, there was a little flip here, but price was still below, so you can't buy. So you wait for it to flip back bearish. So it flips back bearish at around here. Short position. So it flips back bearish around this candle. You can have your stop loss above this area of resistance. So these are the zones. You want to have your stop loss from zone to zone. TP1, TP2, TP3, 1 to 3 risk to reward ratio. Depending on what your stop loss was, you could have lost this trade, but that's nothing to worry about because you've only lost 1, and here you made a 1 to 3. Okay, so if this is 3%, you've only lost 1%. And there'll be more trades coming in. If you look at it here, they were conjoined. If they're conjoined like this, you want to wait for something like a breakout, so where they separate. So they separate it around here. You take your sales. That's a nice entry. So let us see how you would have caught this giant bearish position. Let's see if this was able to predict what happened. Price is below the aqua, crossover, short position at the crossover. And since this is the 5 minute, you'll realize that your stop losses aren't going to be so big. This is only 16 pips stop loss. So it looks big, but it's just a 16 pip stop loss. And since we are price action traders, we just incorporate more indicators to help us get an edge over the market. That's what we are here to do. So price being above the previous price of interest around here. So you want to have your stop loss just above at 16 pips. You have take profit 1 at a 1 to 1, take profit 2 at a 1 to 2, and take profit 3 at a 1 to 3. Obviously, you can't expect to juice the whole move since nobody can predict what is going to happen in the market, and that's why I like to take profits off the table. Let's not be greedy and just secure the chunk you need and leave the markets for the next day. So with that, as I conclude this video, you only need 2 indicators on the 5 minutes. When properly executed, you can incorporate this with other strategies to help you get a better edge over the market. But I think that's it, a very simple strategy. If you found this video helpful, could leave a like, subscribe, leave a comment in the comment section below if you have any questions. You could follow me on Instagram, follow the free Telegram group. I'm planning on releasing daily breakdowns during New York session before I enter trades. So see you next time.